Welcome to our episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Luke Leins. He's a Senior Vice President of Business Development at ResProp Management, a third-party management firm with over 600 team members and over 23,000 units under management. Luke's background includes development, acquisitions, private equity fundraising, and third-party management. Now, Luke's strategic approach is to partner with ownership groups looking to develop multifamily portfolios by assisting with deal sourcing, underwriting, capital planning, and market research. So, Luke, thank you so much for coming on the show today.
Charles, thanks for having me, man. Glad to be here.
So please tell us a little bit about yourself, both personally and professionally, before joining your current company, ResProp.
Sure. Yeah. I grew up in Colorado. I'm a Colorado guy now living in Florida. Colorado State University. Got into financial services in my 20s. We started funding mortgages for spec builds in Mexico on golf courses down there through my finance group. And I really took to the physical asset, the real estate. I enjoyed that. So, gosh, this would have been 9 years ago now, dating myself a little. I decided to make a pivot and get into real estate full time. Worked for a senior living owner operator buying up long-term care facilities. We were building age-in-place facilities in Ohio and in Texas. And then found myself with Alliance Residential in a third-party management growth role. And I probably didn't know what that meant for the first 2 weeks working there. It's such a strange industry. And then ResProp called me about a year later. I really liked their vision. The founder has a wonderful vision for not only the industry, but for humanity and our role in elevating humanity. And I really bought into that. And I've been at ResProp for coming up on 7 years now. So it's been a fun ride. And yeah, it brought me here. Life is good.
Yeah, that's great because property management is a very difficult, thankless business. I've realized over the years of doing it myself for a few years on a small portfolio of mine. And then also of, I guess 13, 14 years of hiring third-party managers for our properties. It's you only get calls when there's problems. Usually no one's calling you and say, thank you so much for doing that.
Yeah, absolutely. Yeah, it's thankless is the right word for sure. People ask me, right? Clients, friends, they say, why are you in this property management business? My opinion is it's the worst part of real estate. And I think that's probably why I'm okay at my job, right? Is we know that it's bad and we aspire to make it not terrible for employees, for teammates, for clients. But it's a tough business, right? Owners say, I want more out of my property manager. I want more. And you've got to realize that I think the best of property management companies are managing to maybe a 12% margin. So people are saying, why aren't you investing in R&D? It's like, because there's no money to, right? It's a very thin margin business. And so we have to be really smart about managing people who make $50,000 to $100,000 running $20 to $100 million assets. It's a crazy thing to think about. So yeah, we're hoping to have some solutions there.
Yeah, makes perfect sense. So can you give us an overview of kind of what ResProp's business is now, what they do, and kind of what your role is at the firm?
Sure, yeah. So we were founded in 2010 as a vertically integrated owner-operator in Tampa, Florida. So the company went full cycle on 20-some thousand units from 2010 to call it 2020. Self-managed, vertically integrated the whole way through. I want to say at the deal level, average IRR through those three funds was something like 23 and some change percent. So did very well as an owner operator. So people, the question would be, why would you ever go from that to being a pure play third party manager? That's a really good question. I ask myself that all the time, right? The main reason was there is a significant market gap in fee management that you can't really find in private equity, right? Fee management doesn't have the resources, doesn't have the talent. And so there's a much larger addressable market. We saw that. We're a very entrepreneurial business. We want to do things differently. It seemed to be the greatest area for disruption in real estate. So we jumped in 2020. What happened then? COVID hit, right? And we were trying to figure ourselves out. COVID was great to us because it really leveled the playing field. So all of a sudden, no one knew what to do with a lot of these things. Resident assistance, right? Collections, how those were being managed. So we were able to make a bit of our name for ourselves early on, figuring that out quicker, right? Being the new guys in town. At the time, we had a couple thousand third-party managed units. We've effectively doubled year over year for the last 4 years. So I think we're doing some things right. One of the big ones is data. Right. We're in real estate. We're real estate finance. We love and rely on data in everything we do. When we went under the hood on a number of these large property management companies to see what they were doing for their BI, the answer was really nothing, which shocked us. So we try. There's one challenge our industry faces is there's not enough talent in property management to service the properties that we have well. Right? That's the problem. That's the reason for the talent crunch. We've been trying to pull talent in from other areas to help that, at least for ourselves. So our managing director actually came from a high-level Amazon operations role. Right. So why Amazon? Why operations? Amazon is probably objectively the greatest operator in the world. So why would we benchmark our large competitors if we're able to benchmark the best operators in the world? So we hired him over, and it's been a great hire. We're looking at things more the way Amazon looks at them, right? And then we brought over a young lady to build out a Power BI platform. Power BI is a Microsoft tool. It's what Amazon uses for their BI. She came from Whole Foods, and so we built out an in-house business intelligence platform. So we're monitoring KPIs, we're monitoring thresholds, we have daily risk scorecards. We're actually trying to bring data into the business so that instead of the success or failure of a deal being based on how good is your regional, right? That's always the first question. It's who's our regional? How good are they? It's hey, how good is the data that's informing decision making at the site level? And I think that's probably the biggest thing that's helped us grow is leveraging data and the new economy to support property operations.
Yeah, no, that makes perfect sense because a lot of property management firms are very antiquated on how they work and then also all the systems they have in place. So one of the questions I was thinking about, I was asking is what sets you apart from other management firms? But the thing though I found there is that your software and the data that you've kind of integrated with it, it allows it to really put a step above and beyond other management companies that I've seen out there when they tell us, what they're really working with, how the application process goes, how everything, all these different things that have to really line up to give people, tenants, potential tenants, and then new tenants that the application and the onboarding process that they deserve that's kind of similar to other businesses and how they work.
Yeah, people don't appreciate how many softwares we have to use, right, in order to stay relevant in third-party property management. I mean, our software stack has got to be 50 different softwares we're using, right? And they're all intertwined and tunneled into one another, and they all have to talk. I mean, it's phenomenally complicated, right? So we use a smaller property management system, mainly because they allow us full open APIs, right? So we're able to bring in, I'm going to use the Amazon word again, but we use Coupa for our procurement system, right? Why do we do that? It's what the best businesses use for their bulk purchasing. And so we wanted to actually roll out a PO compliance process, which oddly, I don't think anyone is doing, right? So what does that do? It creates predictable level financials, no duplicate invoices. The existing procurement systems through the large 3 or 4 competing property management systems that they allow you to use, they didn't allow us that flexibility, right? So it's a constant game of plugging in the latest and greatest from a software and tech standpoint without it being too much of a burden, right? Too much software can definitely just be a derailer and slow you down. So we have to be very, very mindful of how many softwares our site teams are using and make sure it's not too many so they can actually do their jobs.
No, that makes perfect sense because there's a lot of moving parts in property management other than just the tenant experience, but also with the property management portion of it in regards to the project management, all these different portions and people and third-party vendors and everything else that you might be part of a normal communication from, a property management standpoint have to be connected to make it more streamlined. Yep. So kind of one of the things I've seen over the years of working with third-party managers is the high churn really with the people on the ground, like you were talking about before, that $50,000 to $100,000 person that's actually sitting in the rental desk, right? The leasing office, or going to those units and handling handyman or, any type of stuff like that, service request, let's say. I mean, how does ResProp, foster a culture that drives a higher staff retention, which I see as just a very difficult thing? And we've had properties with third-party managers, and they told us, oh, everybody moved to a different property or something like this. And we had this huge issue with like staffing for that problem, which is something you don't think of as a investor on the other side of the table.
Yep. Yeah. I think you use the key word, right? Culture, which I don't know, for you and me and most owners, like it doesn't seem like a very important word. What we've learned is that it's the most important part of our business. The biggest threat to real estate right now at the operations level is human capital. So culture is where we started. We were very blessed. Our private equity business from 2010 through 2020 was consistently named one of the best places to work in Florida, not just in real estate, but in the state of Florida, period. Culture drove that, right? So again, from the beginning, we started comping not just who has the best culture in multifamily, who has the best culture in business, right? So one of the main companies that we dug into was Ritz-Carlton. Ritz-Carlton has one of the stickiest, most best executed cultures on the planet. So one of the things we stole from them is the culture card. So every day, each one of our site teams, each one of our support teams, they get together, they review one of our operating principles, mission, vision, values. It keeps us all on track to remember why we're doing what we're doing and what things are most important to us as a business. 2 years ago, we looked at our voluntary turnover. We're very blessed. Our support average tenure at the support level is 5 years. We're a 6-year-old property management group, thin third party. Our support turnover has been excellent. Our support teams have really bought into what we're doing. That has not always trickled down to the site level. 2 years ago, our voluntary turnover on site was about just under 70%, which means which is wild. Obviously, something we had to fix. We leaned heavy into culture. We leaned heavy into celebrating our people. One of the big things we realized was that most of our turnover was the result of a few people. Everyone is running around offering $1 more, $1.50 more, right? So we started benchmarking NMHC quarterly, making sure that the people on our sites are not underpaid compared to market, because that create voluntary turnover. One of the biggest things we did, right? We're never going to be able to, in this industry, pay people as much as we'd love to pay them, right? There is an income cap at the site level. That's how it is. So we looked at, if you're familiar with Maslow's hierarchy of needs, being part of something bigger than yourself is at the tip of the pyramid, right? So we wanted to really get our site teams involved in the mission and the vision that we had created years prior, to make sure that they felt that they were actually a part of the bigger mission. That's worked out well. And then we've gotten so far as our managing director, Jordan, once a month, he does a call called Ferocious Insights with Jordan. That's actually, we have all of our site teams on, and we talk to them about the financial health of our business at the corporate level, right? What are we looking at? How are we budgeting for next year? What are we anticipating from growth? What are the major risks to our business, both at the financial and operations level? So our site teams know exactly what's going on at the highest level of our business. I think we're probably unique in doing that, right? It's not something that people generally want to share, but if we believe that they're part of our business, we want to make sure that they're being given the information at every level of our business. So this year to date, our voluntary turnover is in the mid 30s. That's darn near market leading. So we chopped greater than 30% off in 2 years, just really leaning into our people, making sure that they felt that they were a part of the mission, and candidly, like they are, right? We just need to make sure they believe that too.
No, that's great. That's definitely some progress that's not seen throughout this industry as a whole.
Do you have money sitting in the stock market and you're worried about it? Or worse, you have money sitting at the bank, not keeping up with inflation? My name is Charles Carillo, founder and managing partner of Harborside Partners. And since 2006, I've been investing my money and my family's money into income-producing properties. These are real assets, real properties with real addresses that produce real cash flow. At Harborside Partners, we provide passive investors who love real estate with a turnkey investing solution. If you want to put your money to work in real estate but can't find deals, don't have the time to get funding, and the last thing that productive people want to do is manage real estate. We find the deals, we fund the deals, and we manage the tenants, the termites, and the properties. Partner with us at investwithharborside.com. That's investwithharborside.com. Go to investwithharborside.com. If you love real estate, you like the idea of passive income, and believe that income-producing properties will appreciate over time, go to investwithharborside.com. That's investwithharborside.com.
What would you say? I mean, you're doubling year over year with units coming on management, or that's what you're averaging. So you've definitely spoken to investors and property owners that have had, less than ideal, let's just say, property management experiences in their past. What would you give some advice for property owners on hiring and managing third-party managers?
Yeah, so third-party management, the growth of the third-party management industry it's new, right? Really, it was in the 90s that third-party management started kind of becoming a thing. And then it's really only been 10 or 15 years maybe that we've actually had these weird dedicated property management business development capabilities, right? Generally, it was just the operator, the owner who was going out doing the networking, picking up deals. So the industry has evolved a lot over the last 10 years, particularly in the how we grow area. So most of the large groups have business development teams, client services, biz dev, partnerships, whatever they call them. Their job is to grow the portfolio. Early on, it was really just, I used to work at Alliance Residential, and Alliance probably, Jeff Cron and Clark McLaughlin probably built out the best biz dev team in the business in the 2010s. Really, the goal was go out and golf and have dinners and make friends, and inevitably the business will come. What's happened is we've really evolved since then, and now we're doing underwritings. We're being relied on for market information, market intel, right? We're trying to position ourselves more as a partner than as a sales organization. And I think that that's really healthy for the business because we do have access to a lot of information that's very valuable for owners, right? What's happened more recently is the industry, we've kind of taken that partner and the partner aspect really around the pro formas, and it's become another sales tactic, right? So a lot of owners are saying, hey, y'all go to a couple groups and send me a pro forma, and whoever has the highest NOI number on that pro forma is going to be the group that I'm going to have manage my property. Property managers know that. Now you're seeing a lot of what we call unrealistic, almost broker-esque pro formas going out. And so I think the industry, in a way, has really lost that partnership component. So the big one is make sure you trust and are friends with the people with whom you're pitching and operating and working with, so that you're not getting, call it dummy figures that you're then underwriting to that are really going to, I mean, we've seen some deals really derail. There's a property in Jacksonville. We lost the deal to a top 10 group. Their underwritten rents were $400 above ours. And so the owner said, hey, this group, I'm going to be careful not to say names, can achieve us $400 more on our top line rents. It's like, great. They went with them. The property has been in lease up for 4 months. They have yet to sign their first lease, right? This group used rent setting as a sales tactic. And now we have a big pool of investors whose capital is at risk because of that, right? So that's very, very irresponsible, but I'm seeing it more and more in our industry. And I always tell my guys, like, I'm happy to lose a deal because we're not aggressive enough. What I don't want is to have a deal where we're underwriting to unrealistic numbers, and then we're going to cause issues downstream. Because over these last few years, Charles, we've seen people lose money, right? We've seen people get wiped out. We've seen very sad stories, right? And it's not just wealthy people. We've seen a lot of people who were investing in their first deal get totally wiped out. They put all the chips on the table and said, I'm gonna go deep in multifamily in 2022, and over an overambitious industry, including property managers, really put these guys in that position. And a lot of guys lost money, and it's a very sad thing to have lived through.
So because on your website, one of the things like you're talking about, you're becoming more of a partner. And if you look at your website, I found it very interesting. It doesn't mention management really at all. It's really about partnering with owners. And I thought that was a very interesting kind of stance that you take about working with different investors and property owners and assisting them throughout the process of, buying, owning, and maybe disposing of that property in the future. But one of the things you said is that how early in kind of really the acquisition process should investors include their property managers or be looking for property managers before, even putting it maybe under PSA?
Yeah, the first thing I'll say, and I know you have a lot of seasoned and a lot of new investors who listen and follow you, listen to and follow you. The first thing, if you're bidding on deals and you don't know who your property manager is going to be, take a step back, right? As you enter a market, the first thing I would be doing is figuring out who the players are in that market. Talk to brokers, right? Talk to vendors, talk to anybody you can. See who's doing well, right? Grab a CoStar report. If you're looking in Tampa, grab a CoStar report of everything that fits your buy box in Tampa and look at the names of the groups that are managing those deals. Reach out to them, get a feel for them, meet the operators, meet the support teams, figure out how they work before you go in. One of the big things that I love about my team is they really understand their markets. Generally, when a deal hits the market, we know something about it. We know the history of the deal. We've been seeing this deal listed for 4 years, right? This deal was flooded in Hurricane Ian. The owner of this deal, we know the owner profile. They're going to be very challenging to deal with. Things like that, right? So before you even underwrite, there are a lot of things that property managers can tell you about a deal and about a market that might make you want to hit it hard and really dive into it, or that might make you say, hey, you're right. This deal does have poly plumbing. I don't want to deal with that, right? It's got FedPack panels, all sorts of things that we can help save time, which is a big part of what we do, right? We're not an extension of an analysis department. We don't want to be the underwriters for our clients where they're churning through 100 deals and we're just underwriting that first pass. But let us at least give an opinion on a deal before you go in, if it fits the profile. And the other big one is a lot of groups, their property management partners, they don't know their buy box, right? To share it, right? Let your property managers know that I'm really hot and heavy on these markets, on this product type, on these deal sizes, anything like that. Because if they see something selling, if they hear rumors, you're going to be on that list of groups that hear, right? I remember Charles said he wanted 90s, life value at 90s in this market, and I think, I'm going to send this to Charles, and at least he knows that this deal is either up for sale or maybe going up for sale, so that he can work his process on it. And then, generally once you know that a deal fits your box and you're going to be in the running from a price standpoint, that's when you engage property managers. The big ones, right? We underwrite revenues. I'll say we underwrite revenues. I don't think it's our job as a property manager to be economists, right? That's the big one. Is guys will say, hey, why did you underwrite market rent growth at X? And it's like, well, we're gonna default to what CoStar says, or we're gonna run something sort of generic. But I don't really want to be the one with the liability of saying this market is going to improve by X. What we can underwrite well is renovation costs, right? What sort of premium we think we're going to see based on renovated comps. And the big one is expenses, right? And this is the one, again, where you want to be really careful with expenses, is making sure that the property manager is not selling you a bill of goods on the expense side. So payroll, obviously a huge one. You see a lot of people coming in low on payroll, and they say, this is what the T12 says, right? The T12 has, if you run through the T12 in detail, you might see 4 or 5 months of being short-staffed in multiple positions, right? So it's stable, or they're underpaid, whatever it may be, bonus in line with market. So property managers should be able to give you a full payroll breakdown, base salaries, commissions, bonus, burden, so that you can really understand how we're looking at staffing that property. G&A, obviously a big one. Marketing, obviously a big one. So asking for more granular detail in those areas is really going to give you peace of mind that you're not just being sold on an arbitrary number punched into a model. So I'd say that's the biggest one. And then obviously the big one is, where can we layer in ancillary revenues? That's a big one, because ancillary revenues are reasonably standard. Bulk internet is the new big one, valet trash, charging pests, all these items is making sure that's being maximized. Property managers are a great resource for that, right? Making sure that you're not doing things that are not allowed while also maximizing achievable ancillary income is a big one.
Yeah. And also if they're managing properties nearby and they've had experience with whatever this ancillary income you're adding in there, right? This other revenue, they'll know how it was accepted by the tenants, and they know kind of like how successful it was too. And then they can present that to you as kind of really almost a case study of what happened with other clients of theirs. But one thing that I found when working with property managers have been very helpful for us over the years has been obviously assisting with the underwriting, but really the renovation budgets and really putting that into like true light, because you're working around it every day. And I think people with the pro formas, they start putting in numbers as they think, or that they saw somewhere, or that was before somewhere, and it's just not accurate anymore. And I find that as one of the big things that comes off. And then the other thing too is if you're seeing operators that are really, or managers that are showing that there's going to be a lot of decrease in expenses, it's always a red flag for me. And I think you have the property managers that come in and kind of like, whoa, this is why there's bad reviews, like you said, or we're short staffed or whatever it was, or people aren't staying or renewing. This is because that T12 says, and that's what you're supposed to be fixing. So you're going to might have to put more money into this, not decrease. Yeah, you might change 2 vendors and save a little bit of money, but you know what I mean?
Yeah, it's funny on acquisitions, right? So on a change of management, things aren't going well in your deal. You want to change managers. Owners generally ask for a lot of information. How are you going to market? What's your marketing strategy? To whom are you marketing? How are you going to improve the reputation of the property? It gets really granular on these change of management pitches. On acquisitions, generally, it's just pro forma, and then there are no more follow-up questions. So having a bank of questions about how are you going to achieve these things that you're putting in the pro forma is always huge, right? Make them prove it. One of the things I always suggest doing is, let's say you're using, I'm in Tampa area, so you're buying a deal in Tampa, and you have a property manager who manages stuff, and they send you a pro forma. It's okay to ask, go on CoStar, pull their portfolio in the market, grab the deals that are most similar, and say, hey, can you either give me a summary of a roll up of your per unit expenses in each of these items, or individual P&Ls, which some will do, some won't, to see if the way they're operating their existing deals aligns with the way they're telling you that they're going to be operating your deal, right? Oftentimes you'll see, you'll get a pro forma and it'll have payroll at $13.50, and then you grab their portfolio and all of a sudden their payroll across the board is $16.50 to $18.50, right? And you say, well, how are you going to manage my deal $500 a unit cheaper? And I say, well, and there's never an answer, right? So trust, but actually don't trust your property manager, right? And until you have a great relationship, don't trust your property managers, because keep in mind, we have owners saying, make it cheaper constantly. So we're reacting saying, you want lower numbers? Sure, here you go. But there are bounds of reality that we need to stay within, and it's always good to make sure that you're verifying how they're actually operating on existing deals today.
That makes perfect sense. When we brought in property managers early to do due diligence and like walk the property with us and everything like this, during that process on your side, what are some common unexpected property issues uncovered during the inspection period?
I mean, we always look for the big ones, right? Units are generally units. We don't see a ton there. We're always looking for water. Generally the unit walk is as much an inventory so that we can be ready for a renovation program as anything. Inventory of age, condition, renovation level of each unit. The big ones, I mean, it's the big ticket items, right? It's roofs, it's deferred maintenance, plumbing. I was just touring a deal, man. We were touring a deal, and in the parking lot, the main water line was leaking into the parking lot on our tour. And we were probably the 20th tour on this deal, and we were the first ones that found it. I don't even know how much we were talking, $20,000, $30,000 to fix this thing. No one had found it. It was wild. So plumbing is a big one. It costs a little extra money to camera lines. We think that it's more than worth that money. Plumbing is probably the big one, right? We're gonna pull some panels. We're gonna make sure electrical is fine. Deferred maintenance, generally landscaping, sprinkler systems don't work as often as they do, right? Those can be 6-figure repairs. So we try to be really diligent and make sure that we're covering as much as we can in that 3 or 4 day period. We uncover a lot.
Then after 20 tours, they still didn't see that into the parking lot. That's amazing.
I don't know, man. I mean, they said it must have just happened. I don't know. We'll never know.
So as we're kind of wrapping up here, what would you say are some common mistakes you see real estate investors make regarding property or asset management?
I would say the big one is choosing, right? What is it? It's interesting. If you ask the top 5 property management companies, right, what do you do differently? What sets you apart? What's your value proposition? They'll probably all tell you we have the best people and we have the best process, right? It's like, well, we can't all have the best people. That means that, there are no best people. So everyone's going to say we have the best people and we have a great process. And you go under the hood in that process and you find out that there's a lot of Excel spreadsheets being used. And they're probably not going to let you under the hood too far, right? So there aren't any clear differentiators among property management companies among the NMHC top 50. There are some that have some neat things. Centralization is cropping up. The use of AI is today a lot more buzzword than anything. Be careful of that one. I don't think there's a whole lot being done on the AI front to actually improve NOI today. I would say make sure you're really trying to figure out who you can trust, who you can partner with, and you're not just hearing pretty things, right? There's a lot of pretty things that people can say, but make sure that you really believe in the process and that you're meeting all the people from the head of the business down to, again, that regional that you're going to be working with, to make sure that you're comfortable with the people over anything else. Because today that's what you're going to have in the industry. A lot of groups, well, they'll get a nice pitch. They'll really like their biz dev guy, whatever. Make sure you're getting behind the curtain and meeting as many people as you can and getting as much information as you can before committing to someone.
Luke, a lot of great information. Thank you so much for coming on. How can our listeners learn more about you and ResProp?
Yeah, absolutely. And I guess I'll say always here with, this is a long game, right? We really are just here to build relationships and help people. So if there's anything I can ever do from a market standpoint, from an assistant standpoint, I'm happy to reach out. It doesn't just need to be about new business, right? LinkedIn is a great way to get a hold of me. LinkedIn, Luke, Luke Leins, Leins, or via email, LLEINS at ResProp, ResProp.com. But yeah, would love to hear from you.
Okay, sounds great. We'll put all those links into the show notes. And I want to thank you again for your time and coming on the show.
Yeah, thank you very much, Charles.
Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate, but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.